Okay, good morning and good afternoon, everybody. Happy Monday. Happy post-Father's Day. Hope everybody had a great weekend. It's going to be a fairly quiet week here in Washington due to the Juneteenth holiday. And this is actually one of those what they call CODA weeks, the Congressional Delegation weeks. So there's a lot of folks, both on the House and the Senate side, that have left the U.S. For example, the House Foreign, so the House Foreign Representative McCall, I'm getting mind blank here. Representative McCall, Nancy Pelosi, and other host of delegation of individuals are actually flying to India to meet with the Dalai Lama this week, just to give you an indication that there's not a ton of work happening here in the Washington space. However, I do want to do two things. One, sorry, one second. I apologize for that. I want to do two things. First, I want to go ahead and share my screen. I want to just give you an update that my friends over at Bloomberg Government have given in terms of the House appropriations process, because they put out this wonderful chart. Um, so we can see here is that there are 12 appropriation bills that have to make its way through September 30th. And here is the status of many of them and where we are. So you can see that several of them just the past week have made it through the subcommittee. Several of them have actually made it through the full committee markup. And then we're going to have to see some floor votes come out later next week and the week after. So in terms of like things happening in Washington at the moment, this is a lot of the congressional work that's being done, post offices, judges, and the appropriations process. So just wanted to give you a highlight of some of the work Bloomberg government is doing. You can see here for the next 4 weeks, we have not much happening this week, obviously, because they're out. Next week we have this work done in commerce, labor, energy, and so forth, and then in early July we'll see a lot of the rest of the work. And this is the House spending for the 12 bills. You can see obviously the big one is the defense. This is the $833 billion. And then it just goes bill by bill by bill. So let me go ahead and cancel that. But I just wanted to highlight there and say that's a lot of the work that we're seeing done here in Washington. And I'm actually going to do that because then that makes my camera a little bit, Bloomberg technology is the best. There we go. So let's talk about what else is going on this week. Well, last week we saw the White House nominate a couple of individuals, and I wanted to take this time to talk about what those nominations mean. So first off, we saw the CFTC Commissioner Christy Goldsmith Romero to be nominated to be the next Federal Deposit Insurance Corporation, the FDIC chair. Now, this is important because if you've been following the regulatory space, you know that the Basel III endgame has been making its way through the regulators, and that's a three-agency rule, the Fed, the OCC, and the FDIC. And due to the toxicity of culture over at the FDIC, there's been a lot of pressure on Martin Gruenberg, the chair, to resign and quit. Now, he has said that he is happy to resign, but he will only do that when a successor is confirmed. So now the White House has moved forward and has nominated Christy Goldsmith Romero, one of the CFTC commissioners. Remember last week I actually said, it was Kristen Johnson. I'll explain why that was what's going to happen to Commissioner Johnson in a minute. But what you should know is essentially two things. One, this nomination does not derail the Basel III endgame. Even if Christy Goldsmith Romero is confirmed this year, I do not think it's going to change the calculus of what's going on over at the Basel III, over at the Fed and the OCC and the FDIC on the work on the Basel III endgame. I think that Commissioner Goldsmith Romero, if she were to be confirmed, would show up and say, it's too late in the game for me to really change what the work has been going on, these broad and material changes, if you will. And as a result, I think that she will just bless whatever work has been done. And so I do not think the Basel III endgame is going to have any impact of this whatsoever. The second thing is that I'm not so sure she's going to get confirmed. Now, she was confirmed almost, I think it was unanimous consent to be confirmed as a CFTC commissioner, but there's a difference between being confirmed as a CFTC commissioner than it is being the FDIC chair in an election year. In fact, I just saw a statement this morning from one of the senators on the Republican side saying, we've already reached the point of the year where I want the next president to decide. Now, we've also seen a letter from Senator Mike Lee and Senator Tuberville and Senator Vance, for example, sent to the Biden administration in the wake of the Trump guilty verdict in New York, saying that they are going to oppose every single nominee no matter what. Now, look, that was going to happen either way. That's not really so much of a big surprise. But the reason why I'm telling you this is that I think Commissioner Goldsmith Romero can get those votes. I think she can get the votes. The question is, can she get the time? Because we only have so much time before the election, and because the Republicans are not going to allow her to move quickly, you're going to have to use 30 hours of floor time to get her confirmation through. And that really just comes down to one person. That's Senator Chuck Schumer. So Senator Schumer, as he's doing his trip this week, whether it's back to New York or if he's abroad, I don't know. But as he's doing this trip this week, he has to think, what do I want to do for the next 2 to 3, 4 months before the election? Do I really want to spend those 30 hours nominating and confirming somebody to be the FDIC chair to replace somebody who's already there and is really just going to get the Basel III endgame done anyway? I don't know, and I don't think anybody in Washington really knows. So just keep that in mind. As you see these headlines going through with the FDIC chair process, I certainly think she can get there. Just real quick, she's the former Special Inspector General at TARP, so she does have a lot of experience cleaning up houses. So I think that would be her first task over at the FDIC. Long term, we don't know about regulations or anything. She's more progressive than the CFTC chairman, for example, and differed with him on certain things. Back in 2013, she actually made a statement that there should have been additional work post Dodd-Frank. So those are just some of the statements that we've been able to get from her over the years, but I certainly think she'll increase examination risk. So if you are overseen by the FDIC and she comes into office, that certainly is. And this also, again, presumes that President Biden wins re-election. If President Trump wins, then things could dramatically change. Now, when it comes to the CFTC, at the same time, Kristen Johnson, who is the other Democratic commissioner, was nominated to be the next Assistant Secretary for Financial Institutions. Now, no word on when her confirmation hearing / vote would be. I honestly don't think that's much more of a, I think the FDIC is a little bit more of a higher priority because they're nominating somebody in the last, few months of the first term. And if President Biden loses, this is almost a moot point anyway. However, I would just state that the Assistant Secretary for Financial Institutions is not exactly the policy-making regulation role that many banks or compliance or risk folks actually are thinking of. I think of it more of as a conduit between the Biden White House and the banking community. So somebody who is actually doing more unofficial outreach, more unofficial policy. Back when I was in public policy, for example, that position in working with Treasury was not something that, we proactively or actively did in terms of trying to change rulemakings and so forth. But this was more of a behind the scenes, just trying to get the flavor of the pulse of the White House and so forth like that. So we'll see if Commissioner Johnson gets ahead. Again, if they were to have the time, and I don't think they would use the time on her this year, but in a second term, I certainly think she would get a nomination and confirmation. And the third thing is the SEC, President Biden renominated Commissioner Crenshaw from the SEC for another term over there. And this is important because she was one of the individuals that was really pushing Gary Gensler on the climate change rules to be more stringent. So if you can remember the climate change rules, there was this debate about whether to include scope 3 or not. And Commissioner Crenshaw was certainly of the mindset of pursuing scope 3. So the reason why I bring her up is that if President Biden wins re-election next year, she certainly could be acting chair if Chairman Gensler were to step down or potentially be in the running for chair. That's still a year or two away. It also obviously depends on the election, but I certainly think that it's just notable because she is a little bit more progressive and pushed the chairman on that side. So I do have a question here. I'm going to just, again, refer to and I think you can, so the question came in is, will the upcoming election have any impact on buy now, pay later regulations? So actually, funny enough, let me go ahead because rather than, let me just briefly show you my report on that because I, ironically enough, just released the update yesterday on that. So, okay, so let me go ahead and share this. So what you're seeing is my buy now, pay later. So this was a proposal that came out earlier or late last month. What this does is that it puts buy now, pay later companies under the guise of credit cards. and essentially treats them as the same. Now, we saw congressional testimony from Rohit Chopra last week. He's the CFPB chairman. It just reinforced our belief about the proposal, really didn't provide any great details about it. But what you need to know is that there are increased disclosures and costs associated with this rule. Essentially, buy now, pay later companies that issue digital user accounts as card issuers, it will probably raise tens of millions of dollars in terms of disclosures, risk costs, compliance costs, and so forth like that. However, under the rule, buy now, pay later would be required to investigate disputes, offer refunds for returned products, and provide billing statements. The irony here is that executives from Affirm and Klarna actually welcomed the regulation because they already perform many of these requirements. So this is something that I often see with the CFPB is that they put these regulations out, and the general high-level view is that these are bad for the industry and so forth, but they're actually welcomed by a lot of the market participants out there because they can get market share gains. Because if you're a buy now, pay later firm and you are now faced with tens of millions of dollars in increased costs, or you're already doing what you're supposed to be doing anyway, it makes it much harder for mom and pops to actually build up, think of the fintechs that are being built in people's garages at the moment. It makes it much harder for those companies to actually build scale and actually to get a foothold in the industry. So I've seen this in payday lending. I've seen this in collection, debt collection. I've seen this here in buy now, pay later. So I actually think this proposal is not that big of a deal for them. And then finally, just, what's the outlook? 30% chance of finalization this year. Look, a proposal that comes out in May, I don't think it's going to be finalized this year. They certainly can, but the comment deadline is August 1st. So with that, I'm going to stop there. I'm going to say thank you very much for attending. If you do have any questions, again, feel free to put it in the chat or reach out to me, and have a great week. Thanks.